The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the day like we usually do, looking at the DAX index. And as you can see, we're almost at a 78% level there, so pay close attention to that. But if we take a look at the big FTSE, they're getting ready for the wedding over there, folks, and they are celebrating big time because we went up and touched a new high in that, I believe, yes, I think we did. And so it's going to be interesting whether that's going to be a double top or not. That's been straight up for the past several months. So this is well, the past 2 months. So it's been, pretty straight up. So it's going to be interesting whether that's going to be a double top or not. It's still a little bit early to check out. Now, we've got a couple of requests from some of our special people that everybody's special, but when a special person asks a question, that's great because that lets me to get some time out of the way because I frankly think you guys get a little tired of seeing all these patterns because that's about the only thing I know. Let's put this up here. This is the ultra short volatility VIX index. This is the ultimate for gamblers, folks. This is the if you want to buy the VIX and you really want to roll the dice, this is the ultra short. So it's telling around 1154. You can see there's some patterns down here, but your risk here has to be controlled. So make sure that it doesn't go below 11 if you decide to do that. But the patterns are certainly there. Remember, this thing got to 29 back in February, and that was just a minor rally. So pay attention to that one if you're interested. Now, the next one that we have a question from one of our good friends way up in the state of Oregon. Let's not confuse Oregon with Washington. I want to make sure we get that out of the way. Let me get this one up here. Ew, I've got to find it. There we nope, that's not it. Oh, golly gee, Red Ryder, what did I do now? Shut the front door and raise the rent. Let me find it, and then I'll do it. Oh, doggone it. And guess what? I did find it. Here's the question. The question was posed, do you see any reason to sell Amazon? I put up the chart here for Amazon over the past 5 months. You'll notice that we've made several ABCD patterns. If you look at it really closely, you can make out a 3-drive pattern from the January high to the March high to the April high. A perfect ABCD up there. We've gone sideways. We didn't back off at all. You certainly don't want this market to get above 1628. That's another $40 from where we are right now. But probably the safest way to enter the trade would be to sell it at 1568, which is this week's low, and then put the stop of this week's high, so you don't have to risk more than $20 on that. That means you'd have to have a weekly reversal in order to be stopped out. But the pattern is complete. There is a 3-drive pattern, and it's very symmetrical, too, from the high in February to March to that big gap up that we had, in late April. So that's one that looks really hold on. Please, we have a student on to tell us that we see timing-wise. Nail the top and I don't quite understand that, Mr. Z. What you're saying, something about the gold. The gold is ready, folks. That's all I know. I can just tell you that I feel. Well, let's forget it because opinions don't mean very much. Just take a look at this from one of our friends over here near Windsor Castle, where they have the big old wedding coming up here. We're going to bring this up here to let you take a look at it. This is just a little simple pattern in the gold on the daily. You'll notice from low to low, there's 111 trading days. If you remember our good friend Stan Harley, also alerted us to the fact that we're coming in here to the 19th of May with a potential key trading date. So that's going to be a very interesting one to take a look at. So that's something that, but it's got a lot of things going for it, but whether it happens or not, we'll have to wait and see. Now, I wanted to bring up one that I wanted to show you that this week, because when these patterns fail, folks, you've got to stand out of the way. You'll notice that we had a beautiful Gartley here last week in the August cattle, right at that 103 level. It rallied really strongly, well, 1.5, which is $600, and then it reversed and closed below that Gartley price at 102. Boy, that's a sign, this thing is wrong. And it went from 103 all the way down to 98, folks. That's why you've got to stand aside if these things don't work. Now, the $64 question is, are we going to have a double bottom here in the cattle? We won't know that for a few days. But remember that when these patterns fail, and you don't have to risk very much, when you're at these key levels, because if you're right, you're going to be right immediately, and if you're wrong, you're going to be out. And that's the key thing that you want to be looking at. But this is definitely a failed pattern in the August cattle, and it leads to a really big cascading move down. You can see the fact that the market gapped down sharply from the previous day's high there on the 12th of May, and then boom, down she came. And so this is where you want to be really careful when these things fail. And we see this happen occasionally, and more often than not. But remember, trading is like breathing. You're going to have to have a few cases of pneumonia before you finally get it right. So just kind of watch that. It would be very, very close. Mr. Z is saying that we're looking at some pretty interesting cycle lows here in the next 6 weeks in the cattle, which could certainly happen. We'll review all this stuff over the weekend in the weekly letter that we're going to take a look at. Now, another one that we've been watching that is actually performing relatively well here, and that is the sugar market. We want to get this up here and let you see that sugar has tested that 1.618 expansion twice now. We've had a pretty nice move off of the bottom. Now the risk is basically nothing. So, because if it goes back down there again, it's not going to be worth very much. And we'll be able to see, how this market ends up in the next few days, because it will be completing an ABCD pattern at that particular time. Now, I've had several questions about that IWM thing that we were looking at yesterday. Give me 1 second here. I want to get the right one up here because I have the notations in it, and I want to make sure that I do it correctly so that everybody sort of gets an idea of, there it is right here. And here's what we were talking about yesterday. And I want to get this up here. There's a potential for a triple top, but we went higher yesterday. We got up to 161. That still completes the double and triple top. But the only way that can be a short sale, folks, is it reverses everything and closes below the weekly low at 158.10. And then if you get filled at 158.10, then you put your stop above the high, which would be 3 points, which would be at 161. That would be a weekly reversal, and that's the only way. Go look at the double tops that you had here. You're doing the same type of thing. Wait till the market turns down from the double top, then you go short with a stop above the top. And that's just simple stuff right out of Jesse Livermore's book. So that's basically what you're looking at. We'll take a look at the yen right after this. That's something we really want to look at because the yen is at a very critical level. And we will look at that right after we take this break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've been asked to take a look at this dollar-yen, and you can see here up this 111 area. We just hit it just a little while ago. That's a 61% retracement from the high that we made back in November. That's a very interesting move because it equals the move that we had during the August to October area. And you'll see that we are very, very close to what we think is some resistance. And that's back to the old lows that we made back in November. So anything above 111.50 would certainly say this thing is probably going to continue going higher and possibly even a whole lot higher. So this 111 area in the Japanese dollar-yen looks very, very interesting. From a standpoint of, potential short sale. If we take a look at the dollar index as of last, and I want to bring this up because this is not quite up to, wait a minute, I'm going to get the up-to-date one. I did it last night so that we could get the up-to-date one so we could look at it. I want to show you where we are in the dollar index on the long-term place, folks, because this is really important from my perspective anyway, because we're almost exactly at the 78% level in the U.S. dollar index on the weekly chart. It's right up there at this 90. I believe the exact number is 93.60, as I recall, its exact number. Now, this, if we get much above the 94 level, this means the euro is going to go into the sewer, and we're probably going to go way below that 117.60 level down into the 115, 114, which we certainly could do. Now, this has been a really strong rally for 5 weeks, but we are up at some pretty serious spots to take a look at it from the, from very, very, very strong resistance. And if we look at this dollar index on just a shorter term basis on the dollar index, this is where we were last Friday. And now I'll bring it up. You'll be able to see it much clearer here. You'll be able to see this 78% level up here at this 93.60 level. That's the number that we were looking at on the weekly. So we are at some pretty interesting resistance area, and that's coming in at the same time that we hit that 78% level in the euro at 117.60. Now, whether that's going to hold or not remains to be seen, but, this is what it's all about. Speculation comes from the old Latin word speculare, which means to observe, and that's what we like to try to do here, is to observe, and that's what we're looking at. So we'll keep an eye on this because it's going to be interesting to see how it unfolds. That's the main thing. Those of you that have been following the market for the gold and the silver, we've had some really strong moves in silver, in my opinion. Given the fact that we've had a situation where you've had very little retracement in the silver move. I mean, it's just been absolutely amazing. Just take a look at this chart here, comparing the silver and gold here, folks. Hold on, here we go. There we go. You'll see here that we've got the silver. You see the gold is making 3 drives to a bottom down here on this hourly chart. Look at silver. It's not even making new lows. It's continuing to hold up. Now, this could be a fake out move for gold, but we need to pay pretty close attention to that because it's going to be looking quite a bit. This is going to be a real key day because this is one of those key cycle days that we had talked about for quite some time, and I think it's worth keeping an eye on it just to see what happens. Now, getting away from that, I wanted to bring one other thing up, and that is on the gold to where we are here. Just get this up here to take a look at it today because we did hit this 1280. We actually went below it. 1284 something was our low so far. Maybe it'll go a little lower, maybe 1240, I don't know. But we're down here at the 61% retracement in the gold. Whether it holds up or not, remains to be seen, of course. Now I have to switch gears here. We got to go over to see Mr. Elon Musk here at Tesla to bring this chart up. We've had several questions about Tesla, and I'll try to answer them the best of my ability. And it's basically only technical because I don't trust cars that you can't hear. But if we just look at the action since January, you'll notice that we had the big ABCD move that finished down there around the 245 level. Then we had a really beautiful rally, perfect 61% retracement up to 314 and change. The high was 314.55, and that was the 61% retracement from the high. So Nikola Tesla himself would like the mathematics on this one. But the reason for the question is this. If you'll look at the action this week, we had a big gap down in Tesla, and then we've had these 4 really narrow-ranging trading days with a big gap down. Folks, I haven't seen this pattern on this chart very often, but if you go way back to the left of the chart, the very far left, you'll see in April we had that same type of thing where the market gapped up and stayed there, and look what happened. It continued gapping up. So my assumption here is we're getting ready to continue to gap down here in Tesla. It doesn't look bullish from my point of view, just looking at the fact that we've had lower tops. The market actually topped with a double top in August, made a higher high than we made in June by about $1 at 299.71, came down. We made a beautiful Gartley pattern up at 360, and from then we've come down, and now we're trading in the 280 range, 285 or so, and that tells us that it looks like it wants to go a little lower. That's what it looks like for Tesla. The Treasury notes and Treasury bonds, folks, they might rally a little bit, but boy, these markets they're just flat out bearish. I mean, they just literally don't want to get out of their own way. And I know everybody wants to try to pick a bottom in it. I think Mr. Z's work that we did here on this show on Wednesday, showing you this critical level of where we are here in the notes and also the Treasury bonds both. These levels are extremely important, and that's going to be very interesting if we get above that 3% level in the 10-year note, because that's going to affect interest rates on your mortgages and car loans. It won't affect credit cards because they put those at a high rate anyway, and also car loans. If you remember, we talked a little bit about car loans and the fact that the default rate now on the car loans is as high as it's ever been. It has even beat the out of the financial crisis of 2008 and 2009. When that broke, look what happened. We're already having default rates higher than that level. So that's not a very good sign for the auto business. But that's neither here nor there. One of my good friends out in Arizona was mentioning as he was driving down the freeway, he saw that the dealers' lots were so filled with cars that they had to put some of them out on the street. So there must be a good time to be buying a car, I guess. So whether that's it or not, I don't know. You can actually buy a car over in London cheaper than you can here, especially on the leasing basis. I don't know how that works, but someone tried to explain that to me yesterday, and I couldn't quite figure it out. But that's what we're talking about. Now, we've had another question about Bitcoin, and we want to get this here, take a look at it. We're almost at the 61% retracement here in Bitcoin. So if you'll take a look at it, that's down at around $7,700 per share. We touched a little below 8,000 today and then went back above it, but we're still looking at that potential to come down here to that 7,700. That's going to be really important, because if we break that, you're looking at the big ABCD heading down to 4,000. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at the gold and silver index, XAU. As you can see here, we've been in a little bit of an uptrend since February. We had the 135 pattern complete. back on March the 20th. We went up, made a 61% retracement. Recently, we made a Gartley sell signal here last week, and we backed off and testing the lows, the 78% level from April 30th. So far it's held. Now, we broke it in the gold, of course. We have not broken it in the silver. And those of you that follow platinum has a real interesting pattern because something that we had talked about in the newsletter this past week, 24/7, and that is looking at the platinum for a potential 3 drive to a bottom, and we certainly have made that today down at the 880 per ounce level. So that has completed 3 drive in the platinum. Whether that'll move from that level remains to be seen, because these patterns fail quite often, but sometimes they don't, and that's the key to what we're looking at. Had several questions about Deutsche Bank. I've been talking about that for quite some time. I want to bring up the really long-term picture in this, folks, because this looks very similar to the Lehman Brothers chart that we had way back in 2008. And you'll notice here that Deutsche Bank at one time was at 121. Now it's trading at 12.99. It's broken all below the 78% level, which was at 13.60. And this market is it's in a cascade, folks. Somebody knows something in this stuff, and they are the largest bank for counterparty risks in the world. In other words, they take a lot of the action because it's a very, very big bank. The problem is their traders seem to not get the best deals. You need somebody to negotiate something for them because they're getting whacked on some of this stuff. And if they can't perform on the other side of some of these trades, we're going to be in a situation like we had with John Merriweather and Long-Term Capital back in 1998 when they had all these Nobel Prize economists. The problem was they didn't realize that the volume and liquidity in the market was as important as the direction. And so we have to be really careful here watching at Deutsche Bank. I frankly, the price objective on this is below $5 a share, and as we know, historically, stocks that go below $5 a share usually don't make it. And we've got, 2 major stocks. Well, there's more than 2, but the big ones, of course, are JCPenney and Sears. I mean, here's 2 previously great companies that are now, very close to one of those books that we don't like to read, chapters 10, 11, and 12. But anyway, they might make it, but it's pretty difficult. We'll have to see. History says if you go below $5 a share and stay there for a very long period of time, you're not going to make it. Some people do. Sometimes they do make it, but it's not very often. So we want to watch this because of the counterparty risk that's involved when we're looking at some of these markets. I've been asked to take a look at the action in the S&P over the last couple of days. I'll give you my 2 cents worth here. It follows the Fibonacci numbers, relatively well. You'll notice the high that we made yesterday was right up at the 78% level. We missed it by about 1 point. Then we broke all the way down and came down to a 61% retracement at 27.10, and then we made a little Gartley pattern. You see that went up last night to 27.25. I don't know where we are today, but that tells us it would have a little bit of a bias to the downside. The fact that Gartley had completed, and whether it's going to move down or not, we'll have to wait and see. Remember, this is a season for the sell in May and go away that hasn't worked for 5 straight years. So maybe it'll work. Usually it's been one of the more favorable seasonals in the stock market, but the fact that these things are based on probability, you have to expect that sometimes they're going to be wrong 5, 6, 7 times in a row, and you have to be able to expect that. That's why they have money management and stop loss protection. Taking a minute here just to talk about that just a little bit, folks. When we look at these patterns, they look really, really cool. Sometimes they not look so cool. But the main thing is when you're looking at this is you have to prepare what your strategy is to get out. one of my old favorite movies was a John Derek movie, who, if you guys remember, married Bo Derek, but he played in a detective movie in 1949 called Knock on Any Door, and it's the same movie that they get the Navy SEAL motto from: live fast, love hard, die young, and make a good-looking corpse. Well, as a detective, he walks into the room and he says, folks, they ask him, he says, well, why do you walk in here without a gun? He says, I never walk into a room until I can find at least 2 extra exits. And that's what he was saying. And this is what you have to do when you're trading. You have to be concerned, about, what you're doing, because once you place the trade, it's basically you have to manage that, and you're not going to be right all the time, and you don't know what's going to happen next, and you don't know how much money you're going to make. So the only thing that you can control is your risk, and that's what you have to really focus on, folks. You have to focus on how much money you're going to risk, not how much money you're going to make. That's the main thing that you have to do, is to look at it. That's very good, David. I'm sure that's where Art and I are the same age. Art Cashin and I are the same age, so I'm sure that is why. No, I carry a BB gun. I don't carry a big gun. You use a BB gun when you're trading. You don't need a lot of money in these markets. A lot of money will get you in trouble. Just keep your risk small, and keep your expectations smaller, and you're going to be just fine, because all of your frustrations in this business come from things that didn't fill your expectations, that were not fulfilled. That's where your frustrations comes from, whether it's your marriage, your kids, your trading, whatever it happens to be. Just don't expect a whole lot, and you'll be just fine. That doesn't mean you can't have a positive attitude. You can have a positive attitude, but keep your expectations, within a relatively good way of keeping him in sight. Let's put it that way. Don't shoot for the moon. You just, like my good friend Dave Nelson many years ago, one of my mentors, says, don't ever go for broke, because you just might succeed. And that's one of the things that you don't want to do in this business, and that's something that you certainly don't want to look at, for sure. Now, we want to take another look here at the crude oil, because we did get up to this 72 level, and then we backed off quite a bit. We got up to 72.30 was the high, I believe. We were looking for a possibility of hitting 73. We never quite got there, but we did get above those old highs, and then we snapped back below it. That's not a very good sign, folks, because that tells you that could be a massive top, and that was a false breakout to the upside. I think we're trading around 71 and change in the crude oil right now, but there's really not much to look at right here, in my opinion. But the fact that it did that is something that we really need to look at. One of the things that I will do over the weekend will be to look at the patterns for the gasoline contracts, the heating oil contracts, and the crude oil contracts, and match them together to see if we see anything. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and I posted a chart for the platinum because this is a half-hour chart. But what's interesting about it, if you like the ratios, you can see that there's a 3-drive pattern there. The expansion of drive 2 is at 1.618 and at drive 3 at 1.27, but it is quite symmetrical. What's interesting about this is that if we take a look at the platinum on a very, very long-term basis, going back in here, looking at the weekly chart, you'll see that we were due for a cycle coming in here on this 42-week cycle within a week or so. So if it's this week, it would be 1 week off, but it would complete that 3-drive pattern, very, very nicely if in fact it does. And of course, we know sometimes these patterns do fail, but sometimes they don't. I get the question all the time, so the fact that I don't look at the fundamentals, does it get boring? No, it doesn't get boring because I look at a lot of different things. I'm probably following about 20 different things, but I'm actually only looking at about 10. Like today, my trade setups, I pretty much talk to the folks on a video that I send out each day saying that this is what I'm looking at today. But, they don't always work. Sometimes they do, sometimes they don't. But what you try to do is put the odds in your favor, and that's really, really what you're trying to do. You can't do anything more than that. Prepare your trades each day. Where you get into trouble is in the middle of the day or early morning. You'll see something exciting and you want to get into it, and it's because you're not looking at the actual time, to put the trade on. In other words, you haven't prepared to do it. That's where you get into trouble. It looks really great, and after you put it on, you're underwater or something. Oh, what did I do wrong? And then you go look and say, oh, why did I do that? And that's where you don't want to get involved in that emotional trading thing, and that's when looking at the monitor all the time, it's going to do that for you, folks, because that monitor is not your friend. It's basically a mirror looking at all the imperfections in your psychology, trying to get money out of your blue jeans, believe me. So just put your trades on. Don't look at the monitor. They really don't care whether you're short cocoa or long sugar. They don't really care. So all you have to do is manage what you have to do, and that's the main thing. But looking at that monitor all day long is not very good. When you're first learning the business, I certainly recommend looking at the monitor as often as you can to see the patterns and find the ratio and look at the patterns. But after you understand what they are, you're not going to change them. So all you have to do is, put your orders in and then try to see what's going on. Now, we've got some hot weather coming across the plains, as you know, and I wanted to bring up this chart for December corn because we have quite a few people at TFNN that are interested in this corn that have been buying these dips. But if you'll notice this Christmas corn here, over the past few weeks, we had this 1-3-5 pattern. You'll notice that the 3 came in exactly on the new moon, and we had Mr. Winsky on that day that was right at the 414 level. We rallied all the way up to 421. That's only 700. That's only 7 cents, which is $350. But for trading purposes, you know, corn is a great thing to trade because you don't have to risk very much, and you're not exposing yourself to a great deal of harm. Yet it makes some pretty good money. You can see that the 1-3-5 pattern, indeed, was absolutely perfect. And you know, that's really what you're trying to do, is to put your positions on that give you a high probability of working. And if you wanted to make more money, you just add more contracts of corn, because believe me, corn is a massive market, folks. I mean, millions of bushels each day are traded, so you're not going to run into trouble with illiquidity in the corn market. In fact, all the things that we trade here at 24/7 and TFNN, most of the folks are all based on very, very liquid contracts. You know, we don't do things that are in the, well, not very often in the penny markets, but, and I don't do anything with the cryptocurrencies as of yet, even though I look at them. I haven't actually made a trade in any of them at all. So I actually purchased one of them, but not very much. So we'll see what's going to happen with that. You know, that looking at that down the years, only paid 50 cents for it. I bought some stocks. What the heck was that, the name of that darn thing? ADA Cardano. So that's it. Now, another question someone's asked about was the NASDAQ, if that head and shoulders pattern that we focused on Monday was still in play, and it certainly is. We went up and we hit the exact 78% level, folks, on this over, I believe it on Thursday, Wednesday, and it is, you know, hit it exactly to the exact tick, 77.10 and 77.09, and we're trading quite a bit below that right now. Whether it's going to continue in that direction or not, you know, we don't really know, but that pattern is complete. The pattern in the IWM, if you want to short that, you can't short it until it gets below Wednesday's low, which is at 158.10, because at least you'll be selling it into a down market. And if you get there, then you know what your risk is. That would be the high that we made yesterday or today, and that would only be 3 points. But you can't sell that. Well, you could sell it anytime you want, but to do it professionally, in my opinion, you wouldn't want to sell that IWM until it starts to show sometimes some type of weakness, and that would be below the 158 level. So if we get below 158 next week or whenever, we'll take a look at it and see, and then we'll try to, you know, walk you through that. But you certainly don't want to sell it before that time, because at that point you would know exactly what your risk is, and the trend would be, at least your short-term trend would be in your favor, and that's actually a pretty good thing as we look at this. Someone's asked me a question about the long-term implications of gold. If we take a look here, folks, I want to get this up here to let you see it here. This is the long-term monthly chart here in gold. And as you can see here, we had the huge ABCD, and that CD leg was 1.618 of the AB. And you notice that we've been in this really tight trading range between 13.65 and 10.30 for well over 2 years now. Now, that's not a bearish pattern, folks. I disagree with anybody that thinks that's a bearish pattern, because I think it has the possibility, should we get above that 13.75 level in gold, you know, if some miracle would happen, you would be looking at something that would look very, very interesting. So keep in mind that does not look like a very bearish chart to me at all. And if we look at the weekly chart on gold, I think you're seeing the same thing, because you're looking at a market that could easily, you can see these ABCD patterns that measure up $150 from where we are right now. And actually, yeah, about $180 from where we are right now. We could easily do that, because we just made the 61% retracement at 1285 yesterday. So whether that's going to be much at all. We'll have to wait and see if that's going to be the case as we go and look at it. As we came in Monday, of course, we were looking at another possible downswing in the gold, which we certainly did get. We had a beautiful ABCD pattern last week, a perfect ABCD exactly at the 382, and it said that, if we broke below 302, it was going to be pretty, and what we do? We went right down to 1285, but that was the first indication that 382 level held, and that's not a good sign. That could even mean that we're going to go down to 1240. You don't know, because no one knows where these markets are going to go. So you got to just be careful and always protect yourself, because if you don't, you're telling the market that I know more than you, Mr. Market, and Mr. Market doesn't like to hear things like that. 877-927-6648. We'll be back to talk about soybeans.
One of the keys to success in anything is the ability to make new distinctions. So what new distinctions are you making to achieve even more success in your life? When it comes to trading and investing, I wanted to become the best of the best, which is why I went on to make new distinctions. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest have been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 in gold. On Wednesday, May 23rd at 5 p.m., I'm going to share with subscribers one of my newest distinctions, which is how to follow the money and do so in multiple currencies. You see, money has to flow somewhere, and with the world getting smaller and smaller each day, you and I can identify exactly where most of the money in the world is flowing. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I just sent a private message to Basil by mistake. So, Basil, if you get it, just disregard it, please. It was a question mark. I didn't understand one of the questions someone was asking me in the den. And the question was, I posted the chart for soybeans. You can see we've completed the big ABCD pattern. We had a nice rally, 15 cents, and we're back down testing those same levels again. So whether that's going to be the key level to look at or not, we'll have to wait and see. But remember, Norm Winsky was on this week, and he talked about the importance of this week. And we've had a lot of cycles happening on the 15th, and then again here on the 17th and 18th. And remember, folks, back in May of 2015, on May the 19th, we had a new moon and we had Mercury going retrograde, and Norm came on and he actually talked about the market was going to top and have a very significant correction, and it certainly did. I'm not saying he's saying that now. I'm just saying that the anniversary to that is tomorrow, and that is also the Avery, our 7-year-old grandson's birthday, and the smartest little guy in the whole world, the best piano player, the best violin player. But anyway, it's going to be an interesting time as we look at these anniversary dates, and especially this seasonal that has not worked, this sell in May and go away. Just because it hasn't worked 5 years in a row doesn't mean that it's not going to, because it has a 60% track record. Well, 60% is not too bad. If you could hit 600 in baseball, you'd be a superstar. So in the markets, you can certainly do that also. Pay attention to that, because we're very, very interesting. The last I wanted to talk to you about was this banking index. We did complete this Gartley here in the banking index with all that bullish news we had. The markets moved a tiny bit lower. So there's a possibility that could be a prelude to a market bringing in some weakness early next week. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!